How encouraged are you by the news of China reopening?
And absolutely, especially for this sector, right? And what we have been talking about Cathay also, what drives the share price is the news flow. And we have plenty of those. And that is pretty much now is fueling the recovery. We have seen a lot of start-stop with respect to China's domestic travel recovery. And that's how pretty much share prices of the big three Chinese airlines have hovered. But probably this is the first sign now that we are probably an inch closer to the international recovery. And that's pretty much from 5% of the capacity of 2019 level today.
Yeah.
It's only one-way street from here.
So do they make money next year, the big three?
Absolutely, but it's a razor thin. So in our latest note, when we upgraded pretty much the entire sector, we are now forecasting them to be mildly positive.
Okay.
But the big story comes in 2024, where we are modeling that they will have the record profit in pretty much their history.
Parash, give us a sense of, what we're looking at, though, with the capacity available as it comes on in terms of load factors and also yields here as well.
Yeah. So, I mean, if you see the markets where we have seen the full recovery or nearly full recovery, the load factors are pretty much went back to 2019 level. And this is pretty much what you will see. Initially, the capacity will come up, and then probably load factors will catch that up. And that is something we have seen with Cathay also. And that is pretty much what we're going to see.
It's about capacity, though, as well. I mean, that's bringing that back on.
So bringing that back on, Cathay and SI was a different ballgame because they did not have a domestic market. So for them, actually, the large part of their fleet was parked in Alice Spring or in one of the deserts. When it comes to the big three Chinese airlines, they pretty much tried to bring those international capacity back into the domestic market. And that's one of the reasons that if you look at around the world, that air ticket prices are materially higher than 2019. But when you look at China's domestic air tickets, I mean, up even into the third quarter of 2022, it's about 15% lower than that of 2019.
Cathay Pacific, how optimistic are you that this company can actually come back to those pre-COVID levels?
I mean, if you look at the market cap, it is ahead of that already. It's the share price because of the issuance of share. What we are modeling now is that Cathay is already making money in the second half of 2022. They will be profitable in 2023. It's just that for Cathay, one of the single largest driver in a post-COVID was how strong the air cargo market has been. And with now air cargo market rolling over, probably Cathay's passenger recovery could only be, I mean, some of the shine in terms of the recovery will be taken off with the cargo slowdown.
I'm wondering, since news began to trickle through of this reopening, it goes into the Cathay story, the yield story that Rish was pointing out. What data are you looking at to give you a sense of, are people traveling again domestically? Have you seen anything?
No, I mean, so when you look at the domestic, I mean, to be honest, the last 2.5 years of data is sufficient enough to tell us, because every time China managed to contain the cases, we have seen there were months when the domestic travel was over 100% of 2019 level. So that gives you the confidence that there is a genuine pent-up demand. It is just that whether the system allows you to travel or not. And I think that is pretty much gives you the confidence that as soon as you were allowed to travel, you will see enough.
I mean, have we seen a pickup recently?
I mean, certainly in terms of number of searches.
Yeah.
I mean, whether it's the search for the upcoming Chinese New Year, whether it's a search for even the holiday season. If you look at, I think one of the travel site has said that the air ticket prices has gone up by about 30%, and it's now higher than the Golden Week holiday.
Wow.
Okay, I want to just move to shipping, if I may. Sure. How is that recovering? I mean, I was looking at LA port data, and we were looking at Shanghai data as well, just seeing the contrast. I mean, there are no queues anymore in LA. We've got zero in terms of Shanghai in some sense. What is that all telling you about what's coming back? And I'm not just referring just to containers. Let's have a look at dry bulk, which is a different kettle of fish altogether.
Absolutely. And I mean, all the three subsectors has the different drivers. But maybe first, if you can talk about the container. And there are enough data which tells us that with the experience of last 2 years, most of the retailers front-loaded their orders for this holiday season. So if the latest data that we have seen was...
So we look here, there's a support Shanghai there, and we've got flatlining in terms of growth. There you go. Okay.
No, absolutely. So what I'm trying to say is that if you look at the October's data, the global trade is down 3% versus October 2019. So not only that we have unwinded all the additional dining table and chair, but the actual trade is even lower than 2019. So last 4 years of flattened growth, that tells you about how weak the consumer demand has turned out, partly because of the front loading, but partly because now the inflation has started to bite in.
Will we continue to see freight rates drop then? And what signs are you looking for the end of this sort of freight route?
Yeah, so I mean, essentially once you start to lose money at a cash flow level, if history is any guide, that brings some sort of discipline. And now when you look at the freight rate, and what we have been saying in all our Freight Weekly also is that at this trend, probably most of the routes will be losing money come New Year. And that pretty much will allow them to adopt some of the slow steaming, adopt the blank sailing, and probably will try to find a floor. But bear in mind that with the upcoming capacity, we will not see some sort of V-shaped recovery. Once it hit the bottom, it probably will bounce around the bottom.
Does that include tanker too?
No. And the fortunes are separated, yeah, absolutely. And to be honest, like for an outsiders, we saw the never seen rates in container, and then we have seen the dry bulk rates hitting 10, 11 years high, and now we are seeing tanker. And for tanker particularly, the Russia-Ukraine war was the catalyst. And that has pretty much created a longer ton-mile demand, initially for the product, and then now for the crude.
Very quickly, just staying with shipping, separating these all out at the moment, who are your picks here? Which are the best companies positioned right now in terms of dry bulk, in terms also of logistics, which we haven't discussed?
Yeah, sure. I mean, so the idea is that market is very, very efficient. So the two ideas that we like in this space, one is called as SITC 1308HK. It's a container shipping company, so it's very difficult to be pounding the table on it. But what is very important for investors to realize is that if there is one stock which is tied up with China consumption recovery, then it's a SITC. It's an intra-Asia play. And at the same time, because it generates half of its revenue from yen and yuan, probably a strengthening of that also gives a tailwind to this.
And your favorite Chinese airline, I guess. Which one is?
So rising tide lifts all boats, right? So
they're taking an airline.
Yeah.
Yeah, absolutely. So we are buyers of all three. But if you look at the relative performance lately, then it'll be Air China and China Eastern, followed by China South.
And do I bet it's A shares or H shares then?
H shares, just for this valuation disparity.
All right, so there we go.
But A shares are far more liquid.